Hey, so we're looking at XLU. If you're unfamiliar with that, XLU is an index fund made by Spider, SPDR. This is an index fund that's focusing around utilities. And so we're going to just quickly look at a breakdown of its top 10 holdings. The top 10 makes up 64% of this index. You can see some of the stocks that are within it, like NextEra, Duke Energy, Dominion Energy. We have American Waterworks. Basically, your utility companies, your electric company, your water company, anything really utility based. And so, before we go any further, I just want to say if you have any opinions on the utility sector in terms of pricing, specific stock within that sector, feel free to leave it in the comments below, and we can kind of just discuss it to a degree and just kind of see how our opinions differ or are similar, anything like that. So let's just kind of begin setting this up just so we can kind of get a feel of where it's at today. And we're just looking at the past 3 years. And so this one seems to be somewhat trending upwards. Uh, if we just kind of draw it out like it's any other stock, which is kind of the goal. Um, it seems like right around here-ish would be the new kind of buy point, right around 61. Because it was so recent, honestly, maybe like 76, 77 is like the sell point. Um, and then in terms of like a fair value line, we would just draw that in right around here, make that blue. And so the only line that I haven't put on here is a red line, a sell point. And the reason that I'm doing that is because before I started this video, I wanted to see a little bit further back, and I think you're going to like this. This stock just continues to go up. Obviously, there's definite crashes in here. I mean, you can see it. There are moments where it does kind of collapse. Back here in 2008, which I know there was kind of a financial disaster there. So, you know, that kind of checks out. We had another one here in March of 2020. Everyone crashed during that point, so that kind of makes sense. It seems like overall, this index does not really care about anything that's going on except for something crazy like a 2020 pandemic or a bank collapse in 2008. And then right around, I guess, when this started, 01, 02, it did crash there, which I think we could possibly say that's the dot-com bubble. Doesn't really affect utilities, but when people sell in bulk like they did during these times, clearly it's going to impact a company like this, because when the market's selling, just there's no prisoners here. Just it's going to affect everybody. And so this one, based on, if we go back to the quarterly, based on this kind of trend that we're seeing, I mean, I can draw in a trend line just to kind of show it. If we go back to this low, and I can't really, I'll just draw it in as best I can. If we kind of look at it, maybe the best, hmm, you can kind of draw this in any way you want, really. Um, this one, I suppose, makes the most sense. I mean, this captures clearly the earlier years. If we want to try to capture the more recent times, I would maybe draw it up closer to here, or I mean, this is probably the best that I would do. And if I draw in a second one, I mean, this one just rose so rapidly. That's the thing. And then here, if we kind of draw this in maybe like here-ish. It seems to be a fair assessment. I'm trying to capture all the lines. Um, Maybe if I pull this back just a little bit like that, that might be best. And so now let's zoom it back in. You can see it was actually above those lines for a little while, so it kind of makes sense that it pulled back. And now we're kind of in that middle, nearing a buy point. Um, I kind of like this one. Uh, I I'm very interested in picking this one up, just because of the long-term trend. This and it makes sense. I mean, utility prices, they continually just seem to raise in terms of how many kilowatts you're using, the water price per gallon or whatnot. It just continually seems to climb at a very slow pace, but over time it just continues to add up. So, I mean, clearly, if we just stick with the trend lines and then how we drew it out, again, we're just looking at the past like 3 years roughly. We have 2020 back here, and then obviously today is up here on the right. Right now, it's within our trend line, so that's a plus. It's it's below the fair value line that we drew in at 69, which is another plus. I think what I would like to do is hopefully continue to watch this. If it hits, say, 61, I think that's a time that I would definitely add. And if it drops below 61 and continues to get closer to 55, I think I would continue to add very slowly, just one or two shares. Again, due to my current financial situation, that's kind of what I can afford today, is just to add in one or two as it continues to fall and hopefully hits these price points. And then, I mean, obviously the big concern, if you're a conservative kind of like I am, is that it could have one of these crash points. Like this is just a fluke. I don't even want to look at 2020. I don't even really want to look at 20 or 2008, because again, those were just like very unique times. Not that we couldn't have a unique time again, but when I look at this, just very long term, right from the uptrend, and I could even go back to the very beginning. Anytime we've seen like major bars going downwards, like here were two big quarters where it just went down. After that, I mean, it just rose for, and yes, I realize there's some small red quarters in here, but it just rose for like 3, 4 years, and then all of a sudden it had a very sharp decline, 3 quarters in a row. But after that, it rose for literally like 10 years, like 10 years in a row. Then we had this crash, and now we're on the rise again. So the fact that we're seeing three red bars like close together like this, and fairly big red bars, like solid drops here, I feel like that's like a good time to buy, because it doesn't happen. It just doesn't have. I mean, if we go all the way back to the start point of 2009, to have three red bars in a four quarter period, this has only happened one time. Here was two bars. I mean, okay, so here's one, but they weren't like big bars. They were very, very small, but we can count it because it's three in a row. We had, you could say, here's one set of three, and then it rose very rapidly. You could say, also, if you want to look at the back end three, you could say that it still rose rapidly. Here's another set of three. Maybe that's the most similar to this. We saw three, and then it rose. Of course, there's going to be a red one, but just one. It continues to climb. Here's another small red one. Continue to rise. Here's one big one, again, because of the disaster. Came roaring back, and now here we are again with three red bars. I, I'm really liking this one. I think it'd be worth even just adding in now, just to say you have it, and then hopefully add in more as it hits these price points. So that's kind of how I feel about this. I'm just gonna update my tracker here, my spreadsheet. The buy point again for this one, I'm saying 60. The sell point for this one, uh, I'm just gonna put in an X. I just don't even want to consider selling this one unless I hear some crazy news about it. But I like this one long term based on that trend. I mean, this is just clearly locked in. Again, the thing about something like this is even though we're seeing these great rise, is that it's not a rapid rise in terms of uh, dollar value. Because again, even though we saw this crazy rise, only today is it 65 and the max was 76. So if we go back to our 3-year chart, I mean, we've seen for the past, ever since this wild dip in like March of 2020, like we go to the quarterly chart, here's that dip. It was at $50, and even after seeing like 2 years of all greens, it only came up to 73. So it was a 50% return. It's just there's other companies that can likely get you a higher percentage return, and that's kind of the thinking. That's what you need to kind of consider when you look at this. This is something I think is great to just slowly add into over time, build up a position that hopefully you can just sit on for decades to come, and you'll make consistent gains in. It just won't be as rapid gains as something like an Apple, or maybe Apple's actually a bad example, like a Tesla or one of these hype stocks. But again, that's where we could hopefully take that second step where we go into the top 10 holdings and we can maybe pick out one of these companies, preferably one of the smaller ones, that they're going to see if the index grows 50% in a 2-year period, maybe something like American Waterworks is one of the companies that really drove the the rise in it, and something like American Waterworks might grow 100% in that same 2-year window. So just knowing that this is a solid sector to look at, we would then want to dig into probably a few of these just to kind of see which one's doing the best, or just to compare them to each other. But that's the thinking here. So I think this is a winner long term, and so I'm actually going to mark this out that way. um, I'll just mark it, I'm going to mark it orange for now because I do want to add this one. I think because it's currently kind of trending downwards, even today it's trending downwards, I think we can catch this one probably at a little bit better of a price, but I do want to add this one. I definitely want to add this one. So this is just kind of an update of where we are. Here's the utilities, what we added. Currently it's at 65. I'd like to get this one closer to 60, and even better yet, I'd like to get it closer to like 55, something like that. But overall, this one seems like it's locked in an upward trend. It doesn't seem like that's going to break anytime soon. Again, it's just, are you willing to be patient enough to see, I don't know, 5% gain over each year when you know there's other companies out there that during that same period might get 10% gain or 20% gain? So that's kind of the trade-off here. Do you want solid, consistent, small growth, or would you rather allocate funds to another more risky stock that's going to get rapid growth? So that's going to be the trade-off with this, but I do like this one. It seems like it's a clear winner. Again, it's just small growth, but apparently low risk. So it sounds like a win overall. I do like this one, but that's kind of it. Again, share your opinion on this in the comment section below. Let me know what you think, and please like, subscribe, and I will see you on the next one. Bye.